Mr. Sekula, there's been a lot of discussion. You guys beat the drum pretty good on increasing the small business loan amounts for the credit unions, and considering that a lot of the banking community, at least large banks, aren't loaning at all, has a lot of cachet, at least with me. Interested in some metrics. I mean, what assurances do we have that if we give this authority that there will be an increase in small business lending beyond what you're already doing? And how would we gauge that? I mean, given the change, what increase in small business lending, what percentage increase in your portfolio or the credit unions across the country would we expect to see?
Well, unfortunately, I can't speak on behalf of all the credit unions of what their growth would be across the country. I can talk about some of what we've experienced over the near term. For instance, when TARP went into place, within 6 months after that, credit union member business lending increased 18%, while lending with other financial institutions had dropped on the business side. From Randolph Brooks' perspective, we've been doing SBA lending for 2.5 years, and our SBA lending from August of 09 to August 08 to August 09 increased 107%. So the demands are there. But there's also barriers to entry, and some of the things that you've addressed in this is by removing the preferred lender status so that more SBA loans can be granted is going to be a plus. The backstop deal with opportunities for preferred lenders to buy those loans. But we also have to get past the issues that credit unions have with the arbitrary cap that was placed back from the Credit Union Membership Access Act back from 1998. Prior to 1998, credit unions did not have a cap in place. During the Credit Union Membership Access Act, they asked Treasury to do a study on that and found that credit unions had there was no economic or safety and soundness reasons to necessarily support that. They also found in that study that the credit union's delinquency and charge-offs as compared in the member business lending arena were much lower than those of other financial institutions. And those numbers still hold true today in regards to the performance of our member business lending portfolio. I feel from my perspective that by removing some of these barriers, these entry to barriers for credit unions to get in and play, who do have the capital to be able to lend, that credit unions will help. I'm not leading to say that, create an illusion that credit unions are going to save small businesses and take care of all their lending needs. It has to be a cumulative effort of all financial services getting in place to be able to provide those services, but I think credit unions can. And
you'd be willing to work with a committee on metrics like most small businesses would?
Yes, sir.
Mr. Menendez, excuse me if I got that. Menzies, I apologize. A little off topic, I think related here. I've been a little concerned with the FDIC director's recent announcements trying to recapitalize their money. They're talking about making banks pay 3 years in advance of what their normal dues would be. Could you comment, I guess it may be interested in the credit union's response on that too, but comment on what that's going to do to the ability or inclination of banks to lend money in these very difficult times?
Absolutely, Representative. I'd like to make two comments, if I may, which is that I think it would be healthy for the nation to give credit unions unrestricted access to commercial lending, remove their 12.25% cap, provide them an opportunity to be taxed and to pay toward the $1 trillion federal deficit, provide them an opportunity to be part of the community reinvestment program, and offer them the opportunity to be regulated safety and soundness-wise the same way that community banks are. It would be a great opportunity for the nation. Tax them, CRA,
my question, because I'm running out of time. If I
okay, and the answer to your question about recapitalizing the fund, it's a long, frankly, issue. We know that there's $42 billion in the fund right now. $32 billion has been dedicated for reserves. $10 billion is left in capital. The prepayment strategy is a strategy that is somewhat helpful to banks because we're allowed to put that prepaid premium on the balance sheet of the bank and amortize it over a 3-year period of time. The inequity of that solution is that all of us know that the $6 trillion of liabilities of the largest banks of the land are de facto guaranteed under too big to fail. And the previous special assessment was created by defining it as assets minus capital, which appropriately assessed those in de facto insured liabilities. And that's the negative, if you will, of the prepayment of the deposit insurance premium.
Just real quick, because again, I'm running out of time. I apologize.
No problem.
But with the prepayment, are most banks going to be lending more or lending less, given the changes in their balance sheet?
No, it absolutely will restrict the ability of banks to lend. In the case of my bank, $750,000 would be our prepaid insurance premium. That'll come out of liquidity,
Yep.
and that will be not available for lending. And that's, yes, sir, that's your point, and that's an accurate point.
I'd like the committee to look at that sometime, perhaps. Thank you very much.